Hello and welcome on weekly financial market update. This is Sunday, May the 4th, be with you, 2025, and we're bringing you the latest insights which happened during the last week in stock markets, in cryptocurrencies, Forex, and other financial market topics. So let's dive in. The most interesting to me what happened during the last week is the release of the GDP number for United States, the biggest economy in the world. Of course, the changes in GDP of the biggest economy of the world affects the entire financial markets. And with Trump administration took its place more than 100 days ago, we can see the impact, the dramatic impact, how this regulatory uncertainty impacts the economy. So in the first quarter of 2025, the US economy experienced a contraction, so decrease of GDP by 0.3%, marking the first decline since early 2022. So this is the first decline quarter over quarter of GDP since 2022, just first quarter Trump being in charge. A significant factor behind this downturn was a substantial surge in imports, which are subtracted in the calculation of gross domestic product. And even though Trump says this negative GDP for first quarter is not mine, not Trump GDP, it's Biden's GDP, but it's exactly Trump's GDP. And let's see why the GDP decreased. Let's dive into a formula of GDP calculations. So understanding the GDP formula. GDP is the sum of consumption, investment, government spendings, plus exports minus imports. In this formula, imports, M, are subtracted because GDP measures the value of goods and services produced domestically. When imports increase, they represent spending on foreign produced goods, which doesn't contribute to domestic production, thereby reducing GDP. In Q1 2025, imports surged by 41.3%, 41.3% of increase in imports on annualized basis, as businesses accelerated purchases to stockpile goods ahead of anticipated tariffs announced by the Trump administration. This surge in imports subtracted 4.83 percentage points from GDP growth, overshadowing gains in other areas such as investment and consumer spending. So just to be clear, how you calculate GDP, we take all the consumption, everything which was consumed inside the United States, and then we deduct imports because something was consumed, not domestically produced, the foreign produced goods were consumed. That's why we deduct imports from the consumptions. And import increased by 41.3%. It means like the historic level of consuming the imported goods happened in the United States in the Q1. So the initial goal of the tariffs were to move production to the United States. But during the first quarter, the historic level of foreign imported goods were consumed in the United States. What an irony, isn't it? So let's compare the fourth quarter of 2024. Real GDP increased by 2.4%, with imports at normal level. Q1 2025 real GDP decreased by 0.3%, with a significant increase in imports. The dramatic rise in imports ahead of tariffs implementation was a strategic move by businesses to avoid higher costs. Economists, though, anticipate that the next quarter imports will decrease because the businesses will not stockpile the goods once tariffs kicked in. Two consecutive GDP negative numbers, which will signal for a recession in the economy of the United States. So let's hope the second quarter will show that the economy is still strong and everything will be fine. The US stock market had another winning week. The S&P 500 closed 2.9% higher than last Friday. Nasdaq rose 3.4% and Dow Jones registered a 3% gain. What factors contributed to the bullish momentum? Optimism around trade relations. Of course, this trade war, this tariff war is the biggest topic which currently affects all the markets. Because historically, like United States, since the World War II was building a global economy, all the markets were connected to each other, right? And tariffs is the artificial way to build barriers between countries for the trade. So trade is not free now. And of course, when the market hears from Trump's administration signals about possible tariffs, everything goes down because, of course, in the long term, this is much worse for economy, both United States and foreign countries as well. So once on this week, there was a signal for optimism around trade relations, as China suggested it's open to resuming talks with the US on tariffs. The next one is strong earnings report from the tech giants. Microsoft shares increased by 11.1% over the week, and Meta shares rose 9.1% over the week. The S&P 500 surpassed its 50-day moving average, signaling positive technical momentum. And economic data provided a boost. So the March personal income and spending report showed a 0.7% increase in personal spending. It's important. It means that consumers within a country increase their spending, so they spend buying goods and services, which is the good indicator, of course. And April employment situation report indicated a 177,000 increase in non-farm payrolls, with the unemployment rate holding steady at 4.2, which is a very healthy level. So unemployment is very low. And this is another thing about bringing all the production inside the United States. United States has just 4.2% of unemployment. Where will it get new employees to work at all the factories which will move from China to United States? This is a big question indeed. Let's talk about this chart produced by Vanguard, and it's highlighting how important is the long-term investing. And the biggest mistake the new retail investors make, they start to try to guess the market timing. They sell when the market goes down because they're afraid it will go down even further, and then they late to jump back in when the market rebounding. So the most important is to have a long-term strategy and try not to trade, just use the dollar cost average approach, investing regularly despite all the movements in the market. So Vanguard compared 3 scenarios for accumulating $500,000, starting with $10,000 initial investment and annual contributions of $5,000. So it's a strategy. You start with $10,000 and every year you increase it, you add $5,000 to this portfolio. And three scenarios. So first one, with annual return just 4%, which is a very conservative. And remember that during the last 100 years, the average return from S&P 500 was around 8%. So first scenario, annual return is 4% and no increasing contribution. So every year, just 5,000 you add to your portfolio. And time to get $500,000, $500,000, is 69 years. Which is actually, of course, not a very short period of time. The next scenario is high return with annual return of 6%, which is obviously very achievable, right? Taking into account that S&P 500 index, like you can invest into SPX or VOO, and you'll have exposure to S&P 500 index. So annual return 6%, the second scenario, and no increase in contribution. So time to goal 45 years. And the third scenario is increased savings. So you invest less risky, more conservative, targeting the annual return of just 4%, but your contribution increased by 5% annually. So instead of contributing 5,000 every year, you increase it by 5% year over year. And the time to reach $500,000 with this strategy, from just 10,000 starting capital and increasing, adding to this portfolio 5,000 per year, increasing this 5,000 by 5% per year. So the time to the goal to $500,000 is 39 years. So if you manage to invest $10,000 when you're 20 years old, and then you start to add extra 5,000 every year and increase it by 5%, when you hit 59 years old, you'll have $500,000 from that strategy. Bitcoin experienced notable activity this week, starting at around $94,000 per one on April 28th. It climbed to almost 96,000, peaking at almost 97,000. So good positive moves on Bitcoin market. And the key factors influencing this movement. First, institutional interest. Major financial institutions hinted at increase the cryptocurrency holdings. So MicroStrategy, which is the biggest company publicly traded, which holds a huge portion of Bitcoins, added extra Bitcoin holdings to its assets. So continue to buy. All the purchases on the market drive the market price up. Regulatory development. The good thing about Trump administration that they are very loyal to cryptocurrency industry indeed. And SEC stopped a lot of investigations against cryptocurrency companies, making the climate in the United States much more positive, much better for cryptocurrency companies. And a lot of cryptocurrency companies which left United States market now considering re-enter it, because it's now much easier to build cryptocurrency related business in the United States compared to any other regions except El Salvador, I guess. So yes, the good movements that the regulatory developments are very positive. Now Bitcoin is not something which the government tried to fight against. This is something they try to embrace. Thank you, administration, for that at least. And market sentiment in general. Positive trends in tech stocks and general market optimism spilled over into the crypto space as well. And let's have a look at Forex. So Euro USD, Euro strengthened slightly against US dollar. British pound had a modest increase as well, and Japanese yen is stayed steady. So that's a wrap for this week's financial market overview. Stay tuned for more updates, and don't forget to like, subscribe, and hit the notification bell to stay informed. See you next week. Bye.